Uh, like Molly said, the next hour could be very boring. I hope you can bear with me because tax, tax really is a very complicated topic, and a lot of issues are. I mean, today I can only provide an overview, and each individual has different circumstances and facts. So this speech is mainly for educational purpose, and you are strongly encouraged to communicate with your tax preparers or tax advisors for your specific circumstances. And yeah, that's a typical disclaimer I gave at the beginning of my timber tax talk. Mm, I'm with the University of Georgia, the Waddell School of Forestry, and I have been here for almost 6 years, mainly providing outreach education on timber taxes, including income tax, property tax. And before I came here, I was working at Texas Forest Service. It's a state forestry agency. There, I pretty much uh, did the same kind of thing and mainly focus on property tax. So I have some basic knowledge of property tax around the South and have in-depth information about federal income tax. And today we will mainly talk about the federal income tax related to forest. And keep in mind, this is different from the property tax you pay each year on your timberland. And but based on my research and communication with the forest economist in South Carolina, the property tax on timberland is not too bad in South Carolina, at least not as bad as Georgia. Here, um, on average, the landowner needs to pay at least $4 or $5, $6 per acre per year simply on the timberland for property tax. And I know in South Carolina probably is around like one to $2 per acre per year. Oh yeah, correct me if I'm wrong. So again, today's topic is mainly on federal income tax, that the tax due each year around April 15. And today, first I will talk about why, as a landowner or as a forestry professional, why it's important to under, understand timber taxes, how it works, and then I will briefly talk about major federal tax incentives for forest landowners, and then I will spend a few minutes on record keeping because it's very important to show some of your status and show your expenses. And then there are a few tax planning strategies specific for forest landowners. And then I will cover some current issues associated with the federal income tax for forest landowners. And if you have any questions, like Molly said, you can just type it in the Q&A box or the chat box. I'm not 100% sure of which one, but if you have any questions, just let me know and we will address that. So why it's important to understand forest taxes? The first thing is taxes are one of the major costs for forest landowners in our region, and the federal income tax the largest is the largest of forest tax, and followed by property tax. And then for some states, the landowners also need to pay sales tax on when they buy uh, equipment or fertilizer and all those. But in Georgia, they are exempt from sales tax. So again, federal income tax is is the largest tax they need to pay, and the property tax the second. And because timberland investment is a long-term investment or long-term management process, so it gives us opportunity to do planning and also the tax planning. And the proper tax planning is as important as cultivation techniques. And like I said, the government has provided very favorable tax provisions to forest landowners. Some of those are specific for timber or timberland management, and some are just the general provisions, but can be applied to forest or forest landowners. So it's interesting to know those. As a landowner, you probably don't need to know how to fill the tax returns, how the detail, what are the details, but it's always good to know the general rules or general provisions, and then you got a chance to communicate with your tax professional, your tax accountants. And because timber tax is such a niche area, and many tax professionals, they're not familiar with the federal, the forest taxes. So as a landowner or as a forestry professional, we, if we know those, we can communicate with our tax professionals to help us save the tax, so keep more income. And you all know this. Our tax law and the regulations uh, have increased over the years. And right now, after 2017, the major tax law overhaul, uh, you can imagine it becomes even more complicated. But it's not necessarily a bad thing for private landowners, because many of those provisions are actually created by the government or provided by the government. So to encourage you to do certain operations or do certain activities. For example, for forest landowners, the government wants you to do the reforestation or encourage intensive management. And then in order to do that, it gives you tax breaks or tax benefits. So, so it's important to know those provisions. And the tax laws and the regulations are could be very complicated. And here is just a simple example of the benefit of knowing some timber tax stuff. For example, a landowner sold pine and then received the $60,000 from sale, and she paid a forester and also paid on advertisement. And the good thing about this is for federal income tax purpose, it's not the revenue, the whole revenue subject to federal income tax. Actually, it's only the profit part is taxable, which means you can subtract timber selling expenses. For example, you hire consulting foresters or hiring or spend some money on advertisement or do some kind of land survey or timber cruising, those things. Those are actually qualifying expenses, and you can deduct those expenses from your revenue, and only the profit part is subject to federal income tax. So this is one part, and also for most timber sales, if you hold timber long enough, the timber income qualifies as a capital gain, can be taxed at the lower tax rate, which is a long-term capital gain tax rate. So instead of 20 plus or 30%, it's only 15% for most of the taxpayers. So this is a tax benefit for timber sale. So this is just a simple example showing if we know the timber tax provisions, then we can save some money on timber sale and also keep more income. So we can we can improve our timberland investment. So here is a general overview of federal income tax. First, like I said, when you have a timber sale, only the profit part is subject to federal income tax. It's not on the whole revenue. And also, you can deduct qualified expenses over the years, and also when you have a timber sale. And the timber income is normally taxed as a long-term capital gain, which is lower than the regular ordinary income tax rate. And there are tax incentives available. We will briefly talk about them like later. But the status of your timber holding affects how your timber tax is determined and how it's reported, different forms, and also different rules for deduction. And here are the major tax incentives from the federal side. First, the long-term capital gain tax treatment, and also the reforestation cost deduction. This is one of the major specific provision available to timber landowners, and no one else got this. Basically, when you do a reforestation, you are allowed to deduct those expenses or qualified expenses cost immediately. I mean, under certain restrictions. And also for certain forest landowners, they can deduct their forest management expenses over the years. And for some, there are special rules to recover those expenses. I will talk about them later. And also some landowners, if they receive qualified cost share payment from qualified government agencies, then they are allowed to exclude part of the cost share payment. But like all those tax rules, everything is under certain circumstances. It always depends. I will talk about that later. And also casualty loss deduction. This is one of the major provision we provide education on, because in our region, timber occasionally suffer from hurricanes or fire or major storms. Under those situations, timber landowners are allowed to deduct some casualty loss. So we will talk about that in a moment. And for capital expenditure depreciation, this is a general rule to all taxpayers. So if you have major investment in capital, in some major equipment and all those, your CPAs can help you determine how to calculate the depreciation, all those, and then you can deduct those over the years. So those are the major federal tax incentives available to private landowners. And like I said, your status of timber holding actually determines what kind of tax rules are available for you, and what kind of deductions you can take, and how to report your income. And for most landowners, there are three major types of timber holding. The first type is a personal use. Basically, you are holding timber primarily for personal enjoyment. You are not expecting any kind of income from the property. You just simply want to enjoy the property, like enjoy the view, do bird watching, and all those. You are not expecting any income. And the second type is holding timber as an investment. And most of the private landowners in our region or in the whole nation actually qualified for this category, because this is a category where landowners are holding timber for profit. They expect income or appreciation from the land or from the timber property, and they have occasional timber sales, not on a regular basis, but they do have occasional timber sales. And the income from timber sale is now the major source of income for their life. So this most of the private landowners we work with are actually under this category. And the last category is holding timber as a business. And this is a category where you expect you manage the forests for profit. You expect income from the timber, and also your management activities are quite frequent. You have more timber sales, and everything is on a regular and frequent basis. I don't want to go into too much details, but normally, if you hold timber for profit, either as an investment or as a business, you in generally will receive larger tax benefit. And the business, among all those three categories, business enjoy the most tax benefit. They can deduct more. They can deduct more. They can deduct as the expenses spent, which means you don't need to hold it until you have a timber sale. You can expend those costs in the year when you incur the expenses. And sometimes when we have a workshop and we met some landowners, and they're very lovely southern ladies, and said they said they are holding timber just for enjoyment. And I normally encourage them to think about, when you think about tax, it's very important to try to establish a for-profit motivation. In that case, you can enjoy the tax benefit. Otherwise, your deduction will be very limited, and you're not at an advantage for the tax purpose. So even though I know you really enjoy the saying of your property, but try to establish a for-profit motivation. And for timberland management, the profit motive can be either you got income from timber sale, or simply you expect price appreciation in land or in timber. I mean, either one of those could qualify as a profit motive, because most of the private landowners, they don't have a regular timber sale. Probably over the lifetime, only one or two times. So try to establish the profit motive is the first step, or one of the most important steps, showing to show you have an investment. You are holding timber as an investment. And here's a typical question we received from landowners. And we maintain the timber tax website, national timber tax website for the USDA Forest Service, and timber sale. The questions on timber sale is one of the top questions we received. And here's a typical question. They had a timber sale, and they want to know how to report the revenue received, and what kind of deduction they can take. So first, we need to know what type of income is that. Is that capital gain or ordinary income? If you are not a tax accountant, you probably don't want to know all those details, technical details. In general, if you have a timber sale, the income is capital gain, or at least is can be treated as capital gain. But if you have a sale of cut timber, for example, either you cut the timber or you have logger come here, cut the timber for you, and you pay the logger just a logging fee, then the sale of the cut timber is ordinary income, unless you make a special election on your tax form. So it's very important to know what kind of products you're selling. Right? Is that standing timber or cut timber? Standing timber normally qualify as capital gain, and cut timber on the other hand, normally qualify as is classified as ordinary income unless you make a special election. If you made the special election, then part of the income from the sale of cut timber qualify as a capital gain. I'm so sorry. Like I know it could be confusing, but tax normally is quite confusing, and yeah, let's move on. And then we know our timber sale income is capital gain. Then is that long term or short term? Um, there is a huge difference between long term and short term, mainly because long term capital gain can enjoy the lower tax rate. Like I said, 15%. And the short term capital gain is taxed at the same rate of ordinary income. So it's very important to determine whether it's a long-term capital gain or short-term capital gain. And if you hold the property longer than 1 year, then normally it's a long-term capital gain. Remember, it's a more than 1 year. If you hold it right 1 year, right at the 1 year mark, then it's still short-term capital gain. But there is a exception, which is if you receive the timber by inheritance, then it's naturally a long-term capital gain. So if you inherit timber, then you can sell the timber next day and still qualify, the income is still qualify as a long-term capital gain. And if you receive the timber by gift, then you need to combine your holding period and also the donor's holding period. Adding those two together, if it's longer than 1 year, then it qualifies as a long-term capital gain. So everything is depends. That's a classic answer for most tax questions. And then what kind of deductions we can get from timber sale? First, you can deduct selling expenses, like all those necessary and ordinary expenses associated with timber sale. For example, the advertisement fee, you hire a forester, and the forester fee, and also the appraisal fee. If you ask a forester to come here do a timber cruising, then the appraisal fee is also qualified selling expenses, and also the attorney fee. And also the if you have a timber basis, we will talk about that in a moment. Then you can deduct the timber basis from the timber revenue, and that help you reduce the profit and then reduce your tax on the timber sale. Uh, so what is a timber basis? Basically, it's amount of money you have invested or tied up in the timber, and normally it's a dynamic process. It starts with original basis, and then adjust over time as you may invest more into the timber, or reduced as you sell the timber or had a casualty loss deduction, all those. So it's a dynamic number. But basically, it's how much money you have invested in the timber. And here's like I said, how to calculate the basis. start from initial basis and then adjust over time. And then one thing leads to another thing. So how to determine the initial basis? So if you purchase the property, if you bought the property, then your total acquisition cost, including purchase price and all those closing costs, attorney fee, and all those recording fee, and all those are part of the acquisition cost. So those costs will be your initial basis of your property. One tricky thing is you need to allocate the basis among different properties. For example, you need to allocate part of the basis to land and also to timber. And if you have other equipment or other major capital assets, then you need to allocate basis to those categories as well. If you inherit the property, then the initial basis of the property is the fair market value of the property on the date the decedent died. And so we normally call it step-up basis because timber for trees grow, and also timberland appreciate over time. So the fair market value on the date the decedent die is always higher than what they paid. So we normally call it step-up basis. It's a benefit for inherited properties. So later on, when you sell the property, the profit will be lower. So you just need to pay less tax on when you have a sale. And for gift, if you receive the property as a gift, then pretty much you take over the donor's basis. So there's no step-up basis here for gifted property. So if you want, you compare inherited property and gifted property just for the basis determination purpose, you can see the difference, and you can. There is a implication for property transfer between generations. So, and there are a few cases when timber basis could be really low. For example, if the timber is naturally generated, and then after you receive, you got the property, you did very limited investment, or then the timber basis could be really low. Or if you reforestate the property, and the reforestation cost has been recovered under the reforestation cost rule provision, then the timber basis could be really low, and sometimes it's zero. Or the property has been acquired like many years ago, and the cost is just really low. Or if you receive as a gift and the original basis is really low, and in that case, timber basis could be low. Sometimes, especially when we have a sale of property or have a casualty loss situation, the landowner needs to figure out the timber basis. There is a technique to figure out the timber basis if you don't have it, but it involves the help. It needs help from the foresters and also probably accountants. So you need to pay those expenses. So you need to, but in the end, probably the timber basis is still very low, like zero or something. If that's the case, you need to weigh the benefit and the cost of hiring somebody to figure out the timber basis. But in general, we encourage landowners to establish their basis once they immediately after they receive the property, especially when they purchase the property. Right after they got the timber and timberland, we encourage them to establish the basis and then maintain it over time do the update on those numbers. And there is a special form for forest activities. It's called IRS Form T. It got 5 parts, and the form is very useful, even though for most landowners, especially those hold timber as an investment, they are not required to file the form, but we normally encourage them to use a form to kind of organize your expenses and your costs and expenses and the income associated with your timber, because it got very nice organization on those activities. You can you can put all the numbers to help you establish your timber basis after you receive the property. And also, when you have a major sale, you can use the form to figure out the profit. And also, when you have a reforestation, you can use the form help you to organize all the expenses and then help you to figure out the deductions. So it's a really nice form, even though technically you are not required to file the form, but it's a really nice form to help you to keep record. And the IRS says if you have an occasional timber sale, which is 1 or 2 sales every 3 or 4 years, you are not required to file the form. But it's prudent to keep it for record basis, record purpose. And here's how the Form T looks like. Yeah, you can search Form T, and it's very nice form to help you organize your expenses and activities. Let me see if there's any questions.
There have been a few that have come in, Dr. Li, but they're pretty general.
Oh,
Do you want to just finish up and we can tackle them at the end? Or do you want to?
yeah. Okay,
Okay,
that works.
awesome. Thank you.
So if that's the case, I will move on to next topic, reforestation. Basically, there are reforestation tax incentive. There is a reforestation cost tax incentives available for landowners. Basically, you're allowed to deduct reforestation expenses sooner rather than holding it until you have a timber sale. What are the qualified reforestation expenses? They're just a normal, like for example, the site preparation cost, consulting forester fee related to reforestation, and also if you hire somebody to do the reforestation, then those are qualified expenses. And if you use your own equipment, the depreciation of those equipment is also qualified reforestation cost. And when we think about reforestation, we normally think about site preparation and planting in the year, but actually for federal income tax purpose, the qualified reforestation costs include anything, any expenses that are crucial to survival of the seedlings, either artificial regeneration or or natural regeneration. For example, before timber harvesting, if you did some mid-story management just to encourage some hardwood natural regeneration, those expenses could be qualified reforestation cost. And also after you planted the seedlings within 1 year, 1 or 2 years, those herbicide application expenses on those herbicide application could be also qualified reforestation cost. So think about not just that within that year, there are all those qualified expenses that are essentially for the survival of the seedlings are qualified reforestation cost. And you are allowed to deduct up to $10,000 of reforestation cost in the year it happens, and then if there are more than $10,000, then you can amortize those, or it means you can deduct the extra over next 84 months, which means 8 years, if you consider the half-year convention. And then this apply to per qualified QTP property. So which means if you got 2 or 3 QTP property, then you can deduct up to, if you got 2, you can deduct up to 10 for each. Then for you as a taxpayer, you can deduct more than $10,000 for that year, because the limitation is per QTP property. For example, you have a property in one county and then you have another one in another county, and for each one, it's qualified for this $10,000 expensing, up to $10,000 expensing. And sometimes you may receive cost share payment from the government agencies, and then under certain circumstances, you can exclude part of the cost share payment. However, the cost share payment has to be the cost share has to be from an approved agency, and also has to be for capital projects. For example, most of the capital projects we saw are reforestation, and also, yeah, mainly for forest landowners, reforestation is the major ones we saw. And here are some of the active qualified programs we saw. And one is a forest health protection program in our region. Some of those southern pine beetle programs administered by state agencies, state forestry agencies, are actually under the umbrella of federal forest health protection program. And if you receive the payment from those programs, then those are qualified cost share program payment. Or sometimes you receive a CRP program, receive the money from CRP program just for tree planting, and those are also qualified payment. Or equip payments, and for certain equip payments, it's not all of them. It has to be for capital projects. And also in South Carolina, if you receive the assistance from South Carolina Forest Renewal Program, then the payment is also, you can exclude the payment from your income. However, there is a formula for the exclusion. You have to calculate those, and only a portion of that payment is qualified for the exclusion. Yeah, if you want to know more about how to do the calculation, I asked Molly to send a link to the text tips we produced. It has some information on that, and you're encouraged to read those. And also, if you incur ordinary and necessary expenses over the years, some of those expenses are allowed to be deducted as a deduction. However, this is only available for forest landowners who hold timber for profit, which means either as an investment or as a business. And some of those are the typical forest management expenses that are ordinary and necessary. Yeah, you can see those, and then you can also like one of those major yearly expenses are property tax, and if you have road or fire break maintenance cost, and those are expenses. But if you build a road, then that's a permanent capital projects. You have to hold a account for the road, and so those expenses are not eligible for current expensing. And also prescribed burning cost, and the vehicle and overnight travel cost, or if you attend a workshop at your state forest landowner association organized by the organizations, and those costs are also qualified forest management expenses. For if you hold timber as an investment, then you're not allowed to currently deduct those expenses, which means you have to hold it in your timber account. And then later on, when you have a timber sale, you can deduct the expenses from the timber revenue, and then because of those expenses can reduce your profit, then basically you're recovering those expenses later. But if you hold timber as a business, then when you have every year, when you have a timber management expenses, you can currently deduct it in the year when you have it. So this is a major benefit of holding timber as a as a business. And this is how to capitalize, or for investors, how to capitalize those expenses. And for each year, if you occur certain qualified expenses, then just file a statement with your tax return saying you're making an election and you're adding all those costs to your timber properties. And for if your timber suffer casualty loss, then you can deduct or recoup some of the loss. And some of the casualty events in our region, like fire, hurricane, storm, those are normally sudden, unusual, and unexpected. They are all qualified casualty events. But for southern pine beetle, normally if you hold timber for commercial basis, for commercial uses, not as a yard trees, normally it's not qualified timber casualty loss. And here is some general rules for timber casualty loss deduction. There are very specific rules, but one of the major thing is your timber deduction, casualty loss deduction is only limited to your timber basis. So this is a very strict or restricted provision, because many landowners, they don't have a timber basis in their land or in their timber. So when the casualty event strikes, their casualty loss deduction is very limited because of the limited timber basis. And also casualty loss deduction and timber sale, salvage sale are two separate things. You don't need to wait until you have a timber salvage sale to claim casualty loss. You can claim casualty loss deduction in the year when it occurs, and then later on you can do the timber salvage sale. Those are two separate things. And if you have a gain from the salvage sale, the gain can be deferred. We are running out of time, but for the tax planning strategies for forest landowners are mainly just the planning the timing of the payments. Basically, want to smooth out the income And also, sometimes you want to combine the expenses in 1 year, so it could be higher than the standard deduction threshold. And also, you can use the capital loss to offset ordinary income up to $30,000 per year. And it's very important to do the proper record keeping because, like you can tell, you have to show or substantiate your timber basis, your expenses, and then you have to show those. And how to do the record keeping? There's no clear guide from the IRS, but we normally recommend the tree farm journal approach. Basically, you document the activities, the date, cost or income, and also how many hours you spend on those activities. Because if you want to qualify as a business, you need to meet certain number of hours to show your holding timber as a business. So the document the hours you spend on the activities, it's crucial as well. You can tell timber taxation is really complicated. Today's material is only for overview. You are encouraged to talk to your tax advisors about the provisions you are interested, and also we have the timber tax website, and also we are currently updating the forest landowners guide to federal income tax, and hopefully it can be released this year or next, probably next year. Again, my information, and here's my contact is here, and you are more than welcome to email me any questions or comments related to timber tax. I'm sorry, it's running out of time, and let me see how many questions I can address.
I've collected a few. Do you mind if I just read them to you, Dr. Li, and you can
Sure.
respond to them as okay, perfect. Thank you so much for such an incredible presentation. Again, I learned a ton. Folks are asking, guys, I'm sorry I didn't point that out in all of my, I was sort of scattered in the beginning when I lost a connection, but I copied the links to the resources that Dr. Li provided into the chat. Please do go ahead and check out the tax tips for forest landowners for the 2021 tax year document that Dr. Li put together. It's excellent. You can also find it on through the webinar portal that you'll need to return to get your continuing education credits too. More on that later, but while we still have everybody and we're still within the hour, let's launch into those questions. The first one is pretty simple. Do timber tax regulations vary from state to state?
Since this is a federal income tax, so this is applicable to everyone.
That's a good distinction. Okay.
Yeah, but for state income tax, that varies from state to state, and also property tax, especially property tax, is quite different across states.
Right. Okay, that's a good point. Do you have any advice for finding local resources to help our landowners navigate this process in their area? Is there anyone more people like you?
Actually, we have very limited number of timber tax specialists in this nation, and we want to use the timber tax, national timber tax, that platform to try to get the information out. And also, I strongly encourage you to check out that website. And also, for some states, we have state extension agency or universities. They have some, but yeah, very limited number. And sometimes, for example, as for me, I maintain a list of CPAs who attended my workshops, and then I share with the landowners the list if they're interested, and maybe you can check with your local extension uh, forest extension agents, I think,
That is
to
always
see
good
if they
advice.
got local CPAs who know timber tax, but it's again very limited.
Yeah, yeah. Do you mind sharing again that website that you referenced?
Yeah, timber tax wipes timber tax
Oh, it's right there, timbertax.org.
timbertax.org. Yeah.
Awesome, awesome, awesome. I'm just going to pop that in the chat real quick.
Mhm. Some of
Um,
the information is up is a bit outdated, but most of the information is still correct.
Fabulous.
Mhm.
Okay, I've got another one that just came in. Can
Mm.
you elaborate on some of the timber tax incentives related to EQIP?
Equip.
Yeah.
Um, yeah, normally if you receive the cost share payment from Equip, then and also if the Equip payment is for capital projects, for example, reforestation, and those and also for conservation purposes, then those you can exclude the payment from your taxable income.
Okay.
But
Okay.
again, it's subject to a formula, and you need to consider your annual income in the previous your income from the property in the last 3 years. Yeah, it's a complicated procedure, but basically you are allowed to exclude part of the payment, but you need to calculate how much you can actually exclude.
Okay. That
Mhm.
makes sense. Can profit motive include renting land to hunters, so that it qualifies as a business?
Um, that's a good question, but for example, for reforestation incentives, if you want to enjoy the reforestation incentives, you have to have the timber for commercial purpose, which means for production of timber products. So for for that
Oh,
provision, you have to hold it for timber. But for um for other provisions, yes, if you are holding timber, if you're holding the property for hunting and those, you can still qualify as a business, but it's really hard to qualify. I mean, you have to substantiate what kind of expenses um, is the ordinary and necessary expenses for your wildlife management, for your hunting purpose. So you
right.
have to show those are ordinary and necessary.
Yeah. Okay, that makes sense too.
Mhm.
Okay. All right. This one is it's not complicated, it's just a little
Mhm.
long. Can you bear with me because it comes with
Sure.
an example?
Uh,
Do you have just another, I don't know, maybe 2 minutes?
sure.
Okay. Okay. When deducting costs for an investment property, do you
Mhm.
claim those costs in the year which they occur? Or, with proper record keeping, can you wait to claim those costs in the year that a timber sale takes place? And then I have an
Mhm.
example if that's not clear.
Yeah. That's a good question. In the past, you can deduct it in the year when it's occurred, uh, even though under some kind of limitation. But after 2017 or starting from 2018, because of the tax 2017 tax law change, the only way for you to recover those costs is to keep those in your timber account, do the proper record keeping and recover those when you have a timber sale. So that's the only way for you to recover those costs. You have to keep a really good record, and then, like I said, for each year, you need to do a statement, like saying you are electing to add those costs to your timber.
Okay, okay.
Mhm.
I think that that's all that we can get
Okay.
to right now, everyone. Thank you so much for your thoughtful questions. Dr. Li, thank you for this
Thank you.
incredible presentation. I know that I'm going to be revisiting it, and I just want to throw in right now, guys, that this is all recorded. We're going to post it up to our YouTube platform as always, and tell your friends because you can always watch it for a year after the fact. Still get your CFEs. And also, there's a lot of complicated information, a lot of really great resources. So feel free to revisit Dr. Lee's presentation that way, just for a little refreshing. Okay, I'm going to stop recording. Thank you so much, Dr. Lee.
Thank you.
We've taken up more than enough of your time today, so I'm just going to stay on for some questions in terms of CEU logging. But I want you to have a good rest of your day and stay safe down there, please.
Thank you, Molly. Thank you, everyone.
Thank you so
have a
much.
great one. Bye bye.
Thank you. You too. Take care. Bye-bye.
Bye.